Okay, we are recording. So I just finished up the recorded lecture that had some additional examples of the statement of cost of goods manufactured. And then I wanted to also do one, for journal entry practice. So chapter 1 also introduces us to the journal entries for a cost accounting system, and we got practice with a few of these entries together in class, but we weren't able to go through an entire problem where, you know, we go from the purchase of raw materials until we sell the finished goods. So I want to do a couple of those together with you and get some practice. So I've got a couple of them, a couple problems here set up for us. So I'm going to share my screen with you. Okay, so we've got two problems here for practice with some of these cost accounting journal entries. And I mentioned before in class, you know, so chapter 1 introduces us to cost accounting, managerial accounting. Chapter 2, we go more in depth into direct material. Chapter 3, we go more in depth into labor. Chapter 4, we go more in depth into overhead. So we are going to see these journal entries again kind of interspersed throughout the chapters, but just so we get some practice going through all of them together now and kind of see what these look like. So this problem, and this one's not out of your textbook. This was from a different textbook that I had, but nonetheless, it gets us practice with these cost accounting entries. So letter A, and I guess kind of the first thing I want to say before we get started on these is that material inventory, what else? Work in process inventory, finished goods inventory, factory overhead, and cost of goods sold. All of these follow the same rule, you know, as far as journal entries are concerned. They follow the same rules as assets, right? These all increase with debit, decrease with a credit, right? So all of these accounts, you know, obviously the inventory accounts are assets. So we know that assets increase with a debit, decrease with a credit. But then also factory overhead and cost of goods sold, those also increase with a debit, decrease with a credit. So just kind of something to keep in mind as we're going through and doing these journal entries together. So anyway, prepare summary journal entries to record the following transactions and events A through G for a company in its first month of operation. So letter A, raw materials purchased on account, 90,000. So we're going to debit raw material inventory, 90,000. Credit accounts payable, 90,000, right? That's what that would look like. We're increasing our material inventory, crediting accounts payable because we purchased these on account. All right, this one says direct materials used in production, 36,500. Indirect materials used in production, 19,200. So actually this is one, I want to get one more row in here. Because what we're going to do on this one is we're going to have two debits and one credit. So we debit work in process inventory for the amount of direct materials, and then we debit finished goods we debit factory overhead for indirect materials. Because remember, indirect materials fall under that factory overhead or fall into that factory overhead cost category. So this one we would debit work in process, which again, like we said in class, I'm going to just call it work in process inventory, WIP inventory. So we debit work in process for the direct material amount. We debit factory overhead for the indirect material amount. And all of these, both the direct materials and indirect materials, came from raw material inventory. So we're crediting raw material inventory. So with that first journal entry, and let's see, I don't know what this is, equals the sum of these two guys. That's the total material we used, 55,700. And then one thing I want to just put in parentheses here, this is direct material. And then factory overhead, this is indirect material, right? So, you know, again, when we purchase raw materials, we were debiting or increasing raw material inventory. And then when we take some of that raw material and we transfer it over to the factory, now it's in the factory and it's getting used in production or getting used in the manufacturing process. So we're taking it out of raw material inventory and then accumulating those costs into work in process and factory overhead. Work in process for the direct material portion, factory overhead for the indirect material portion is what we did there, right? All right, letter C, paid cash for factory payroll, 50,000. Of this total, 38,000 is for direct labor and 12,000 is for indirect labor. So just like we did up in letter B, just like we did up here with our direct materials, indirect materials, we're going to do the same thing with direct labor, indirect labor, right? So I'm going to get me one more line here. So we're going to debit work in process for the direct labor amount. And so we've got direct labor, 38,000 is for direct labor. We're going to debit factory overhead for the indirect labor amount. Indirect labor is 12,000. And then in this case, it's telling us cash. So we're crediting cash, 50,000 is what that one would look like. Okay. Letter D, paid cash for other actual overhead cost, 11,475. So again, factory overhead increases with the debit. So we're debiting factory overhead. Oh, hot dog. We're debiting factory overhead, 11,475, crediting cash, because it tells us that we paid cash. And again, it's just given us this kind of aggregate number, this total 11,475. But we can assume that those costs consist of probably, you know, insurance on the factory, utilities on the factory, depreciation on the factory, rent or mortgage payable on the factory, factory supplies, maintenance on the factory equipment, repairs on the factory equipment, right? Those would all be considered overhead costs. All right, letter E, applied overhead at a rate of 125% of direct labor. So one thing we're going to learn about more when we get to chapter 4, when we get more into overhead, we're going to learn more about this predetermined overhead rate. And if I'm remembering correctly, when I did the chapter 1 recorded lecture, we talked about this predetermined overhead rate a little bit, but basically, you know, because of the nature of our overhead costs and the fact that some of our overhead costs, like depreciation, like maintenance on factory equipment, like repairs on factory equipment, like mortgage on because some of these overhead costs are not easily divided up per job, for example, what we do is we come up with a predetermined overhead rate. And the predetermined overhead rate says, in this case, it's based on direct labor. So for every, $100 of direct labor cost, we're going to apply $125 of overhead cost. Or, for every $1 of direct labor cost, we're going to apply $1.25 of overhead. So, what we do to kind of calculate this predetermined overhead rate is we look at the previous year and we look at, okay, what was the total amount of overhead costs? And we take that number divided by the total amount of direct labor cost. And that'll give us this rate, like this 125%, or our predetermined overhead rate that we'll use. But nonetheless, like I said, in chapter 3, we get into more calculating that, but this number does come from somewhere. And it's basically the ratio of overhead to labor cost based on a previous year, right? So we've determined then for every $1 of direct labor cost, we're going to apply $1.25 of overhead cost, right? So applied overhead at the rate of 125% of direct labor. So now what we're doing is, up here we debited work in process for labor. We were applying labor costs to work in process, right? Up here, we debited work in process for material costs. We were applying material costs to work in process. Now, in letter E, we're applying overhead costs to work in process. So we're debiting work in process inventory. And it's for 125% of direct labor. So equals, here was our direct labor, times 1.25. So we're applying overhead to work in process 47,500. So we're debiting work in process inventory, crediting factory overhead. So, again, factory overhead increases with the debit, decreases with the credit. So we're moving these costs out of factory overhead into the work in process inventory account. And so now we've accumulated material costs, and I'm just going to highlight these three real quick in pretty color. So we've accumulated material cost, we've accumulated labor costs, and now with letter E, we've accumulated overhead costs. So again, those are our three main manufacturing costs, right? We've accumulated material, we've accumulated labor, and now with letter E, we've applied or accumulated some factory overhead. We've applied some factory overhead. So we've applied those three main manufacturing costs to work in process. So now what's going to happen, now we've got all three of those costs going in the factory or going in our manufacturing plant. And so now we're going to finish something. That's what we're doing with letter F. We're going to finish something. So we're going to move it out of work in process into finished goods, right? That's what we're doing here in letter F. So letter F says transferred cost of jobs completed to finished goods, 56,800, okay? So we're moving it out of work in process into finished goods. So we debit finished goods inventory, if I can spell, finished goods inventory, 56,800, crediting work in process inventory. Again, we're moving it out of work in process into finished goods because now these have been completed. So now we've completed it. Now we're going to sell something. And so that's what we're doing here in letter G. Sold jobs on account for 82,000. The jobs had a cost of 56,800. So for those of you that took Principles of Accounting last semester, you should remember pretty good that in letter G here, we're going to have two entries, right? We're going to have a journal entry to actually record the sale, the sold job on account 82,000. We got one journal entry for that, right? And then we've got a second journal entry to record the cost of the job, 56,800. So again, for those of you that have been out of Principles of Accounting 2 or Principles of Accounting for a while, you might not necessarily remember these two entries, but for those of you that took Principles of Accounting 2 last semester, we got a lot of practice with this, right? These are two separate entries here. So the first one, sold jobs on account 82,000. We debit accounts receivable. $82,000. We credit sales revenue. I would really just prefer if we just always called it revenue, but you know, they want to call it something different, seems like in every textbook. And then the second entry, the jobs had a cost of 56,800. So these costs we move out of finished goods into cost of goods sold. Again, cost of goods sold increases with the debit. So we're moving it out of finished goods into cost of goods sold. So we're debiting cost of goods sold, 56,800, crediting finished goods inventory. Because we sold it, it's no longer in finished goods inventory, we sold it. So we moved it out of finished goods inventory into cost of goods sold. So what is that? We've got 1, 2, 3, 4, 5, 6, 7, 8. 8 journal entries that get us from the time we purchase raw materials until the time we sell the finished good, right? 8, I think I might have said 8 or 9 in class. 8 journal entries get us from the purchase of raw materials until when we sell the finished good. All right, so that got us a little bit of practice with those entries. Excuse me. Now I have one more of these picked out for us. And this is one out of your textbook. And this one we're going to see the journal entries are a little bit more involved. There's several more of them. There's A through K in our textbook, so that's more than 8 journal entries, but you know, it'll get us practice with it. And there's actually, this is a 3-part problem, but we're just going to do part 1 because I just want us to get a little bit more practice with these journal entries. The other 2 parts involve preparing the cost of goods manufactured schedule, the income statement, the balance sheet, which we just did on the previous recorded lecture. So again, on this recorded lecture, I'm just going to focus on those journal entries, right? Just part 1 and getting practice with the journal entry. So again, this is problem 1-6. It says the post-closing trial balance of Custer Products Inc. on April 30th is reproduced as follows. Prepare the journal entries to record these transactions. Okay, so we scroll down here, and I did put the trial balance information here, but we won't use it because we're not going to do the part 2 and part 3. We're just going to focus on just getting more practice with these journal entries. So during May, the following transactions took place. And again, our instructions are to prepare the journal entries to record these transactions. So letter A, purchased raw materials at a cost of $45,000 and general factory supplies at a cost of $13,000 on account. And then it says in parentheses, recorded materials and supplies in the materials account, which again is just saying we're recording direct materials and indirect materials in the same material account. And that's just like we did on the last journal entry, right? So remember, for the, when we get to where we, you know, send some of these costs or record some of these costs to work in process, that's when we kind of divide up the direct and indirect materials. But for now, they all get debited to the material inventory account. So this one would be debit material inventory. And I guess I'll go over to here. Let's see, 45,000 plus 13,000. So we bought a total of 58,000 in material. Credit accounts payable, 58,000 is what that one would look like. All right, and that looks exactly the same as the ones that we, or the one that we did on the previous journal entry. That's previous journal entry exercise. So letter B, issued raw materials to be used in production. So again, this is when we're moving it from the storage room or the stock room where we keep our materials. We're moving it from the stock room where we keep our materials into the factory or into the manufacturing plant to be used in production, right? So issued raw materials to be used in production costing 47,000. So that's our direct materials. And miscellaneous factory supplies costing 15,000. That's our indirect materials. So I want another line here. Let me insert another row. Okay, so we're going to debit work in process inventory for the direct material. And I forgot the darn parenthesis. That's 47,000. Okay, we're going to debit factory overhead for the indirect material amount. That's 15,000. And then we're going to credit material inventory. So again, if we're thinking about material inventory, like our storage facility or our stock room where we keep all of our parts, that's our material inventory. And now we've just taken some of these parts and transferred them over to the factory. Now they're being used in the factory. 47,000 of direct material, 15,000 of indirect material. We add those two together, we've used a total of 62,000 in material now, right? All right, letter C. This one says, recorded the payroll and payments to employees as follows. So factory wages including 12,000 of direct labor is 41,000. I gotta look at our book again. This is supposed to be including, oh, okay, here, I see what I did. There's a space between those. So that's supposed to be 12,000 of indirect labor is what that's supposed to say. So recorded the payroll and payments to employees as follows. Factory wages were 41,000. That included 12,000 of indirect labor. Selling and administrative salaries were 7,000. And then it says additional account titles included wages payable and payroll. Ignore payroll withholdings and deductions. So for letter C, basically we've got to record, and I'm going to add a couple lines here. We have to record the overall payroll expense, right? And then we have to record that we paid it as well, right? So in this case, we're going to have, and let me make sure I got enough. I need one more line here. So the first one, we are debiting the payroll expense. And what do we got? We got 41,000 plus 7,000. So equals 41,000 plus 7,000. So 48,000. Crediting wages payable. 48,000, right? And then of course, when we pay this and we're ignoring, like it told us to do, we're ignoring payroll withholdings and deductions and all that. So then when we go to pay this, we're going to debit wages payable, 48,000, credit cash. 48,000. Okay. So we've recorded the overall payroll. That was the 41,000 in factory wages and then the 7,000 in selling and admin salaries, 48,000 total payroll, right? But now we want to, in letter D, we want to distribute that payroll into either, you know, wherever it came from. So the direct labor amount gets debited to work in process. The indirect labor gets debited to factory overhead. And then the selling and administrative salaries get debited to selling and administrative expenses, right? Is what that one would look like. So we would debit WIP inventory, work in process inventory for the direct labor amount. And let's see, that is, so factory wages were 41,000 minus the indirect labor amount, 12,000. So 29,000. We debit factory overhead for the indirect labor, 12,000. Oh shoot, I forgot I needed to add a couple rows here. Hot dog. I always think I'm prepared and then I get in the middle of the problem and not so much, right? So debit salary and administrative expenses for the 7,000 in admin salaries. All right. And credit, and I'm just, right, credit payroll for the entire amount. So we threw all of it, you know, up here on letter C, we threw it all into this payroll account. And now we have divided it up into the correct expenses or cost categories that they belong in, right? We took it out of kind of this overall payroll account and accumulated it in the actual expense account to which it belongs type thing, right? Okay. Letter E, recognized depreciation for the month at an annual rate of 5% on the building, 10% on the factory equipment, and 20% on the office equipment. The sales and administrative staff uses approximately 1/5 of the building for its offices. So, you know, now we've got some calculations here. And I am going to try to set them up over here on the side. We definitely need more rows than this because we're going to have depreciation on 3 different things or 3 different assets. So let me add a few. Let's see. Copy. And that might be enough. 1, 2, 3, 4, 5, maybe one more. Insert. Right, because we're depreciating 3 different assets here. So, okay, if we look back up at the building, so again, these are annual rates, so keep that in mind. They're giving us annual rates, and we're recording depreciation for a month. So we're going to have to break these rates down. So recognize depreciation for the month. So again, we're only calculating depreciation for 1 month at an annual rate of 5% on the building, 10% on the factory, 20% on the office equipment. So let's get these set up real quick. So building we'll say F equipment, so that's factory equipment. And then O equipment, so that's office equipment. Okay, let's go back up here. And so on the building, 480,000. So let's type that in down here. 480,000. Okay. On the factory equipment, 220,000. And on the office equipment, 60,000. Okay. And then, again, depreciation on the building is 5%. So times 5%. Factory equipment, 10% on the factory equipment. So times 10%. And then 20% on the office equipment. So times 20%. And then remember, this is, you know, again, for an entire year. So once we calculate this number, we're going to need to divide it by 12, basically, break it down into months as well. All right, so let me do the math on these. So we've got equals 480,000 times 0.05. Okay, equals 220,000 times 0.10. And then equals 60,000 times 0.2. All right, again, those are all annual figures, right? So now we want to break it down into monthly totals. So now we want to divide by 12. So equals 24,000, oh, hot dog. 24,000 divided by 12. So that's our monthly figure. Equals 22,000 divided by 12. That's our monthly figure. Equals divided by 12. That's our monthly figure. So monthly, oh gosh. Depreciation, man, I cannot type. Depreciation per month is what we got down here. Okay, so that kind of shows you how we calculate those numbers. The only other thing that we have to think of is the last part of this that says the sales and administrative staff uses approximately 1/5 of the building for its offices. So this whole 2,000 is not going to get allocated to overhead because this is an overhead cost, right? Depreciation is part of overhead, factory overhead. This whole 2,000 is not going to get allocated to factory overhead because 1/5 of the building is used for the office. So then if we say, you know, 4/5, which I don't like that it did that to us. Format cells. This is not a, oh, what in the world is it doing? Oh, shoot. Oh, I really hate when it changes it like that. Okay, well, that's all right. We'll say 1/5, because I don't want to keep messing with it, allocated to office. And here, let me move this over. So 1/5 allocated to the office. If we take our 2,000 equals 2,000 times 0.2, 1/5 of the building, 20% of the building, 4/5 allocated to factory overhead. So equals 2,000 times 0.8, 1,600. So of this 2,000 depreciation for the building, 400 is going to get allocated to selling and administrative expenses. The rest of it will get allocated to factory overhead. All right, so let's put these down. So we're going to debit factory overhead for the depreciation on the building, the portion that we're allocating to factory overhead, 1,600. We're going to debit factory overhead for the factory equipment. That's 1,833, and it tells us to just round to the nearest dollar on these. We're going to debit salary and administrative expenses for the 400. And actually, not only for the 400, the portion of the building, but the 1,000 for the office equipment as well. Okay. And then we're going to credit accumulated depreciation for each of these three assets. So credit accumulated depreciation on the building, 2,000. Credit, oh, I thought it would pop up, but I guess not. Accumulated depreciation on the factory equipment. 1,833. And then credit accumulated depreciation on the office equipment. $1,000. All right, and I just want to make sure real quick. So we got 1,600 plus 1,833 plus 1,400. So we've got 4,833 in debits, 4,833 in credits, right? Okay, just want to make sure. Okay. So, and then here's the calculations again, how we arrived at those numbers. All right. The next one, letter F, incurred other expenses totaling 11,000. 1/4 of this, 1/4 of this amount is allocated to the office function. So, you know, again, just like we did with, you know, direct materials, indirect materials, we've got to divide up what is going to be accumulated or what's going to be accrued in factory overhead versus what is going to be considered the salary and administrative expenses, right, is what we're doing here. So we're going to debit factory overhead. And this is going to be equals 11,000 times 0.75. Because again, 1/4 or 0.25%, or excuse me, 25%, 1/4 or 25%, 0.25 is allocated to the office function. So that means that the other 75%, 0.75 is factory overhead. Debit, and I'm going to copy it from up here because that makes it quicker. This is 11,000 times 0.25. And now we credit accounts payable. And what is this? This is letter F. Yeah. Oh, and I did that wrong. Shoot. Credit accounts. Oh, accounts payable. Accounts payable for the entire 11,000. Okay, so we've accumulated material costs, we've accumulated labor costs, we've accumulated overhead costs. And so now it says transferred total factory overhead costs to work in process. So for this one, to get this total amount, and then I guess I should say as a correction, so we've accumulated material cost into work in process. We've accumulated labor costs into work in process. Now with letter G, we're going to accumulate overhead costs to work in process, right? So we've got debit, work in process inventory, and we get our amount from looking at all of our factory overhead debits. So if we go back, so I put an equal sign there. So we go back here, we've got 15,000 plus, where else did we have a factory overhead? 12,000 plus, 1,600 plus, 1,833 plus, I think we had one more in there, 8,250. So those are the 5 entries, the 5 debits to factory overhead. So those costs, we've debited those to factory overhead. We've increased factory overhead by those costs, right? Now we're taking those, we're transferring them over to work in process. So we're debiting work in process inventory, crediting factory overhead, moving those costs out of factory overhead into work in process. All right. So again, with this entry, so let's see back here, we accumulated material cost to work in process. Here we accumulated labor cost to work in process. And then with the journal entry we just finished, we accumulated overhead cost to work in process. And so now with the next one, we're going to finish something. With letter G, we finished something in the factory, and we're going to transfer it out of work in process into finished goods. So here we're going to have a debit finished goods inventory, 91,000. Credit work in process inventory, because again, we're moving it out of work in process into finished goods, and I forgot a 0. Right? So we finished something, so we've moved it out of work in process into finished goods, and now we're going to sell something. And so we know, and I know, and I'm not sure why I didn't already add in some different things here. Oh, nice. It just insert. Okay, good. Now we're going to have two journal entries for letter I, right? So we sold goods costing 188,000. So we need to do the journal entry to move these 188,000 worth of cost into cost of goods sold out of finished goods, right? So we need a journal entry for that. Then we also need a journal entry to record the sale. And so I'm just going to do them in the order that they gave us the numbers. So the first one, we debit cost of goods sold, 188,000. Credit finished goods inventory. I know I didn't spell it right, but whatever. You guys know what I'm saying. 188,000, right? So that's the journal entry to move the cost out of finished goods into cost of goods sold. And now the journal entry to record the actual sale, debit accounts receivable, because the sale was made on account, 362,000. Credit sales revenue, or simply sales, whatever they're calling it in this one. $362,000. All right. Letter J, collected accounts receivables in the amount of $345,000. So this is debit cash, $345,000, credit accounts receivable. I know I spelled that wrong, but you guys know what I'm talking about, right? And then the last one here, paid accounts payable totaling $158,000. All right, so debit accounts payable. I'm spelling everything wrong. Credit cash. Okay. So anyway, that just gets us some more practice with those journal entries. Like I said, you know, chapter 2, we go more into direct materials. So we're gonna look at these journal entries again. Chapter 3, we go more into labor costs. We're gonna look at these journal entries again. Chapter 4, we go more into overhead costs. We're gonna look at these journal entries again. So we're gonna continue to see these as we continue through the book. But I just wanted us to get some practice with a couple from start to finish. So let me click save on this, and I will make sure to post this. Hi guys. I'll make sure to post this Excel workbook with the recorded lecture as well, and I'll see you guys in class. Bye-bye.